Hello, Mark.
Hi there. Can you hear me now?
Yes,
Got you,
yes, we
buddy.
can hear you.
Hi there.
Hi, Mark. Welcome back.
Yeah, thank you. Happy Monday morning to you all. I appreciate you having me back.
Yeah, I hope you and your family, loved ones, everyone remains untouched by what's going on. Everything okay?
Thank you. Yes, as of now, yes.
Okay.
we had a close scare, but we were tested last week, and everybody's negative, and so we all move on. So
okay. All right. So what's number one on your radar? What's this? The Australian market where you have that wave count? What is that?
Let's see. There's a couple different things I want to share.
Okay.
One is I think you're on the middle screen here. So you see this right here?
Okay. Now, yes.
So this is probably what I view to be the biggest development in the last couple of days, in that you're starting to see a return to defensive sector rotation, which really has been absent over the last couple of months. So this is just a relative chart of the utilities versus the S&P.
Okay.
And so, to me, that's sort of important. I think last week in general was one of the more significant periods of sector rotation that we saw since the middle part of May.
Yeah, with the NASDAQ 100 peaking and not making new highs, while the S&P did at least once last week.
Yeah, the S&P and the Dow and really the Russell 3000, which I use as a larger gauge just for the broader market. I mean, all of those remain right up near the the peaks that we've seen since the early part of June. Now, what's interesting though is that we saw a pretty big sign of technology pulling back. This is just an equal weighted chart of tech versus the S&P that really, you can see that this peaked out almost a month ago, right around June the 8th. And that's when the Russell 3000, that's when the Dow Jones Transports peaked out. That's when the S&P and, largely the NASDAQ 100 has moved on to new highs, whereas many of the indices, particularly on an equal weighted basis, have not participated. So, it is a strange market. I do think that breadth actually got a little bit better last week, and that's a good sign. We did see some pretty encouraging movement out of sectors like healthcare, which are certainly very significant. Healthcare is the second largest sector in the S&P behind technology. So to see this move in healthcare finally is really interesting. This means that other sectors potentially can step in and pick up the slack while technology consolidates and potentially keep the market, hold it up at least for a little bit longer. But the longer term chart on XLV shows you, any move up to 109, 110 is likely going to be very important and likely cause us to stall out. So, I am more short-term bullish on the group. And I think the moves in transportation last week, up 6%, were important. Industrials, financials, materials, most of those stepped in to pick up the slack. So for me, those are certainly very encouraging signs. S&P now lies at a pretty critical juncture with at least one small cycle that I'm looking at that's about a 26 to 27 day trading trading day cycle. It's right around 37 days. So this hit back in the latter part of April. It hit on June the 8th, and it should be happening, potentially the early part of this week to cause a stalling out.
Okay.
But, I'm in general, I'm constructive really into the middle part of August. There's a really big time zone for trend change that comes in, should be right around August the 19th, that I think is important. It's related to the peaks that we saw back in February of this year, as well as the rotation that started in mid-May.
You know when the low in 1982 was made?
Right around August the 9th, I think, right?
I think, right in, I think August 22nd. August 20th, okay. Right around that same time period. That's why it rang a bell to me. Has August popped up to you for you and your work more than once? Is this an unusual kind of time of the year? I know a lot of people looking for weakness into the fall, and it's only a month away from the fall.
Yeah, I don't know. I think that the rotation for me is still pretty good. So I'm thinking that any near-term weakness we see this week, and I think there is a possibility of that would still be something to buy into, and that August is really going to be important. So you see on the left-hand side of this chart, all these different lows that were made, this also happened back in August, and this was a pretty pivotal turning point.
That
So
sure
not only
was.
do we have a 1-year anniversary, but we have a 180-degree and or 6-month anniversary from the February peaks. And we also have a 3-month term potentially from the 14th of May. So all of that triggers in mid-August to suggest that that could have some importance. So
What's
I'm
a cycle
looking
based
at,
on, Mark, if you don't mind sharing that, the cycle in August? It's not a Bradley date or anything like that, right?
there are some Bradley turn dates in August, and a lot of this is just based on the works of my interpretation of Gann theory and really what's going to be happening. And, it's always important to pay attention to, 3-month and 6-month anniversaries of prior turning points. And when they happen to line up in this case, we have one of the more important turning points of the last few years, which happened, right around February the 19th. So when you see an exact 6-month anniversary of that, which hits in August, it also lines up with a 1-year cycle and also a 3-month cycle. For me, that has importance, and you really should pay attention to it.
Okay, Mark, since you know a little bit about Gann and I'm an amateur, do you know why Gann watched planetary oppositions? We have one today, it's with Saturn. Would you happen to know why he felt those were important days to watch?
Well, that probably goes beyond, the focus of our little chat here. That I could talk about this for a couple hours, and I don't know how much.
Okay. How about a cliff note? How about a cliff note answer? Did he see them as
all I would say to you
inflection
on that
points?
is that it's important when you find sun and moon and smaller planet interactions to the larger pairs. Those have a much higher chance of causing a change of trend than when you just look at the longer term planetary interactions on their own.
Okay,
so,
thank you.
Just to give you a quick 30 seconds, and I don't use a lot of my analysis based on this, but I have obviously read a lot about it. So, the period between 22 and 26 degrees Capricorn is exactly where a lot of major planets were in the middle part of February. There's also a huge eclipse, which, Mars passed over that one day before the market peaked in February. So the sun is actually exactly opposite to that as of this time right now. So there is, to some extent, a lot of energy specifically based on that for those that care. I've always thought that natal charts.
Good caveat. Yeah.
Yeah,
I know that. They think I'm a lunatic, buddy. Anyway, so
I'll mention to you that the major eclipse that happened right before 9/11 happened in June, and Mars hit the degree of the eclipse right on the 10th of September, and the same thing happened right and when the market peaked in February. And there is some significance to that for people that care. But
thanks for going public.
Look, my work is based on technical analysis. It's not largely astro-based, but I do obviously, I'm very willing to accept alternative methods that help me to square the larger areas and or cycles, which I feel can be important. So I'll leave it at that.
Okay. Do you think we're on the verge of a major breakdown in the dollar, or are people turning bearish a dollar a little bit late in the move?
Oh, I don't think it's late in the move. I think it's. I think the dollar peaked out, the latter part of 2016, and I think that last week's close was the lowest level we've seen since the middle part of last year. So on a daily chart, you're certainly still seeing the evidence in the last month of dollar starting to break down. This does seem to be sort of an important technical point where things could have some importance. If you look at some of the 8-year cycles that rule currencies, the dollar should be at a pretty straight line lower over the next couple of years. And so, I view this as being, it is going to be important. I'm not sure that we get down under March lows right away in the Dixie. And so if the dollar gets down a little bit lower in the next few weeks, that could be a chance where we start to stall out a little bit. But, I look at the charts of pound sterling, for example, today as actually being pretty bullish. The Euros chart to me still looks And granted, this is a weekly chart, which is still a little bit of a concern, but we're coming upon a pretty pivotal time for sterling and really a make or break, because many people that study technicals realize that when you do reach the apex of these triangle, it can be important. And so my thinking is, if you get up above 126.70, you could have a very strong move to the upside, which would cause a larger likely move up to the mid 130s, and that's a larger area for that.
So are you in the camp that a weaker dollar actually stimulates risk? And so if we're talking about the dollar possibly breaking down, that's what gives the market legs into late August?
I think they're all in their different cycles. You saw the dollar breaking down throughout 2017. It really didn't have that much effect in my view. And I think that various dollar cycles, the period of dollar gains in 2014 to 16 actually were arguably, let's just leave it at that. I think the cycles really are very different. So I'm not certain that a big breakdown in the dollar has to be all that negative for U.S. stocks. I mean, most of them have, most of my work suggests that the dollar should, though, be getting weaker in the months to come. And that might be something to pay attention to.
Okay, and with gold having on the verge of pressing a new high and silver making new highs, still runway left, or could the peak in the market in August be negative for the metals as well as it was in February and March, where you had a liquidation break and metals came off with the market?
I mean, seasonally speaking, gold remains in a very positive time, and as many viewers know, when the dollar and when rates start to turn down, it tends to be specifically very bullish for the metals. So, I don't have this urge of trying to fight the trend and pick the top. I think that the move right now is still bullish and it can still continue. I think, specifically the move what's happening today in silver is very good. And it's actually been gaining a bit on gold. And, for me, that's a good sign. I think that when gold moves and silver does not confirm, that you tend to see, that divergence can be problematic. But I see when you look at CFTC data on futures, that's actually pulled back a bit. It's not as bullish as it was. And we've seen a very good breakout in silver. So I think silver gets up to the highest level we've seen since 2016. So that would be, right around 21 and a half. And that likely is going to represent, for many people that look at Elliott, potentially the highs of this first move off the lows. And then we're probably going to have to consolidate a bit. But, for me, it's tough to make this move from March and April into a 5-wave. It's very, I don't know what to think. I just think that it is a pretty clean, it appears to be a 5-wave move. And I certainly would want to sell into that on strength this fall and then look at buying dips. But I don't have any need to go against the metal trade, given my broader thoughts on the commodity space, which I feel is going to really take center stage next year.
Okay.
So commodities,
grains starting to come out of the hole too. Copper doing well. PM's
that's
doing
interesting.
well.
The CCI for the equal weighted commodity index, and this lies at a pretty critical level right here. So it wouldn't take much for this to get back up above the lows from 2019, 17, and really could show some further rallies. And so that's sort of interesting.
Buy sugar.
Copper has been certainly a lot stronger than many people have given it credit for. And, I think that you're up against, the 300 level does tend to have some importance. You've gotten a bit stretched. And so for those that look at the longer term charts of copper,
bullish.
We'll see. I think as a barometer of the economy, to have copper as strong, I think that you could argue that we're in for, a little bit of a pullback. We've had a very decent run, and we'll see if this area is important or not. I don't see us moving all the way back to prior highs. I think we're going to have a very, very decent pullback to buy into.
Anything in energy that's had, it's been pretty binary, hasn't it, Mark? I mean, everything crashed together into the March low, and everything's kind of recovered together. Just a difference of magnitudes of the recovery. Wondering what you're thinking here in crude. which also
Yeah, I don't love crude oil. I think that we've at least short term, I don't have a real strong directional opinion right now on WTI, but I think increasingly you're seeing peaks be made on lower and lower momentum. And so, for me, that is certainly, that's we'll see. If we take out 38.5, which were the lows from back on the 10th, and I think you could argue that a pretty decent top is in on crude and we start to pull back. But, we have had a fair degree of strength for about 2 months. It now has leveled off and we've seen some sideways trading. Bigger picture, I think you could argue that we're up against, at least on generic charts, we're up at, levels that do have some significance. And
between here and 42, I think.
Yeah, so I mean, I look at this as being, we're heading into a seasonally,
there's a gap there.
Sort of a weak period of for crude, and so I can see a good likelihood of weakness, I think, in the months to come.
Is it possible to have a view on yields here, Mark, with the charts looking like an EKG of someone in a coma? There it is.
Yeah, so I'm not all that optimistic yet that yields are bottoming. I still think that we likely are going to pull back and test the lows near 54 bips. It's striking to me that we do have a pretty positive amount of correlation between yields and stocks over the last year. I think it's around, the R is like 57 or so, which is crazy because yields actually have been pretty flat and down since you notice that yields and stocks all peaked around the first part of June, and that on an equal weighted basis, stocks are down 10%. And most people would say, well, the NASDAQ's at new highs and everything's fine, but yet, yields have not been acting well, and stocks also have not been, unless you're in large cap technology.
Right.
So the growth to value trade has been sort of cracked, and I think that yields, until you get up over levels near 70 bips for me, then, I think the odds are that we're going to see further weakness in yields.
Anything else you want to cover here today, buddy?
The growth value thing is something that needs to be stressed because this is, it's been something that, finally we saw some evidence of growth starting to break down versus value, and it is short-term in nature thus far, but we are seeing just an amazing amount of rotation out of large cap tech in the last week that has really not been seen all year. And so, sentiment is something that's really interesting, and many people have argued that sentiment is overly speculative and that,
Robinhood traders,
Yeah, but I still don't see things as overly bullish. I think that the average individual person is not nearly as optimistic as the institutions have been forced to be, having with the market moving up, and they're forced to participate. But when you look at, I still find the AAII data to be, really interesting, and I tend to think when that lines up, when the retail trader lines up with institutions, and that's when you find the bigger turn. And so I don't. We still have about 14 to 15 percentage points of spread between bulls and bears, where the bears right now are still greater than the bulls. And whether that be COVID cases not able to be contained and just fear, race riots, whatever you want to say, there's just an incredible amount of unrest right now that doesn't strike me to be overly bullish. And so,
right.
I do think that low put to call ratios are a temporary problem. I mean, you have seen the 10-day of the put to call, I think, get down at the lowest level we've ever seen. And so for me, that's, that is interesting. When you see levels in the mid 40s on put to call, that's just not something you typically want to chase rallies in, particularly when S&P is right up near, former highs. And we've seen technology, which is 27% of the market. Now that's starting to falter.
Yeah, and that's been your narrative for the last year or so. We're not going to see any weakness in the market until tech rolls over. So we've just seen the first crack, right?
We've seen a crack, and the question is this a larger crack or does it recover again? And right now I'm just, I don't see enough to think that, it's anything more than just a temporary crack, and maybe I'll be proven wrong, but I am expecting at least a temporary peak starting in late August, in September and October in equities and most risk assets, and then I think for me, the market has rallied a lot further than many have expected, myself also for that regard, without any sort of meaningful pullback. There were a few things that we saw in January, February that suggested stocks can peak, and now we've rallied, but the rally has been very, very strong from a price perspective. But yet we're still seeing meaningful weakness in small caps, mid caps. So I think we have a temporary pullback in the months in September, October, and then the market likely is going to push back to new highs, and then we can peak out again, probably towards the middle to the end of December. I do think that January, February are going to be a very interesting time, to say the least, and it's going to pay to take money off the table heading into the first part of next year. So I do think next year can be a down year.
Any view on the election?
I think if COVID can be kept under control, then it can be a tighter race. I think the Democrats have made some strides only because of Trump's being viewed as having had probably not as effective leadership and a little bit more divisive. But I think that in general, if it can be a split house, then, I would certainly be a little more happy than seeing probably a clean sweep that really takes away a lot of the regulations that most of us small business owners have been accustomed to. So, it's an interesting race. It's going to be, two 70-plus-year-old white men with at least early signs of cognitive degeneration that makes it really fascinating for me. I don't like, either side, and I'm just hopeful that it doesn't get pushed. I think if the election were to be held now in November, that Biden probably wins. I think if there's any chance of it being postponed, which Trump certainly has the power to do, and he's come out and said, given his view of the ballots, mail-in ballots being fraudulent, that, if he fights it and pushes out till January, then I think all bets are off. And there's a realistic chance that he...
Okay, you're the first person that I've heard say that publicly. I've been thinking. I mean, there are actually, don't you think there's some cover behind the social unrest and COVID really not settling down during the summer, and it's going to be very confusing with the flu season, that there'd be enough cover to say the election's postponed, maybe put out some more of those federal troops. And
I'll say this.
The market is thinking about that.
I think that the civil unrest is something that has to be gotten under control. And I think it's always tough to know what to believe about the virus, and it's gotten very political, and I don't necessarily like to speak one way or the other because of the political views. I think that everybody's hopeful that we're all safe. I think the virus is going to be kept under control. I think we're doing the right things now to open slowly and gradually, and people are taking this a little bit, arguably more seriously. It depends on where you live, but I'm in favor of an opening up, but doing it cautiously. And I think we will, if we do that, we can have a flat line. We can have a lower...
Are you going to restaurants with your family?
We've done a lot of takeout. I have gone to open air restaurants and eaten outside. All right. We are all negative at this time. So if we can do so in a safe manner, then I'm in favor of that. And so I think that I'll say this about the election, and this is really the most important point, and there's no other reason to argue either side. If the economy falters during an election year and it's bad, there's never been a time when the incumbent has won. And so that's going to be important, is to see further signs of economic progress and rebounds, and get some sort of a vaccine sometime this fall, which is really, really important to the GOP. It can't be put off till next year, and that would be, if we can get it under control, then I think that really helps at least the perception that the economy is going to get better. We all know that, we're in the biggest time of distress we've seen in 90 years, and that we have a V-shaped recovery in the market that really is out of touch with what the economy is showing. And the economy likely is not going to come back. There's going to be people that are just scared to do anything. And so that's going to prohibit a full recovery that I think the economy is going to be in dire straits as of next year, personally.
Okay, Mark, you want to show people where they could find your stuff, your content, your commentary, show your website?
Yeah, so I started my own business 4 years ago to provide technical analysis to institutions and individuals, and you can visit newtonadvisor.com, and I'm on Twitter as Mark Newton CMT, and I put out daily videos. We have a weekly webinar every Thursday, and I put out content twice a day. I have a focus list that I run, my favorite longs and shorts, it's included. And if you'd like a trial, go to newtonadvisor.com/trial. I'm happy to sign you on for a couple weeks to see if it'll be a fit for your business.
Thank you, Mark, for coming here, edifying us, and sharing your insights. And always learn something from you every time you come.
Thanks, Dale. Yeah, it's great being with you guys, and have a wonderful, rest of the month of
we'll
July.
set something up for the fall. See how this August thing plays out. So
that sounds great.
I'll get a hold of you. I'll get a hold of you after the interview, Mark. Thank you very much.
Take care. Yep,
all right, everyone. That's gonna be a wrap. I'll see everyone for Turnaround Tuesday. Let me just look here for a second. So silver's making a new high. Gold still $3 under the high. Interesting. Anyway, unless it's this. Okay. All right. So let me just tell everyone that you're very welcome. Cool Deep, Monica, you're welcome. Kirk, we'll be talking to you tomorrow. And that's a wrap. Don't just count your pips, count your blessings. Adios. See everyone for Turnaround Tuesday. I think there's going to be some nice counter trend scalps to look at. So see you tomorrow.